What's up guys, in today's video I'll walk you through a trade setup and try to briefly explain to you the reasoning behind my entry. Now, as I often emphasize, the aim of these videos is to basically help you spot and trade at the same time high quality setups while keeping risk management front and center. I think that it's important to understand that trading isn't about luck, but it's mostly about employing the right structure. Obviously, staying patient is a must, and at the same time, you have to follow a clear process to tilt the odds in your favor. I believe that when you approach this game from that mindset, anticipating the market's movements, obviously gradually, becomes more intuitive and logical at the same time. All right, so let's start with the 1 minute NQ chart here, where the first thing that initially caught my eye was this head and shoulders pattern, which obviously is a bearish reversal signal. Now, for those of you new to trading, a head and shoulders is a three peak formation, two smaller shoulders flanking a higher head here. Now, it is basically a clue that buyers are losing steam and then shorts are or sellers might soon take control. And sure enough, as you can see from the action here, right after this pattern is completed, we see a nice order block formation, which is basically a consolidation zone where big players like Goldman Sachs or Morgan Stanley's of the world place their size orders, short orders in this case, obviously, creating a wall of supply. Now, what happens next is we have this sharp sell-off confirming that shorts are stepping in. At this point, I'm assuming many traders might have jumped in here on FOMO to short the shit out of the market, betting obviously on more downside. But here is where I strongly disagree with that approach. I believe that the best trades come from well-developed structures, not just impulsive reactions. And don't get me wrong here. Clearly, the head and shoulders and order block sequence are technically significant. However, they don't provide, in my view, the most defined structure compared to this setup. So instead of chasing the initial drop, I decided to patiently wait for more structure to develop and see how the price would behave if it retraced, testing that order block zone again. And now you might ask here, why focus on this level if it's not high probability? Well, the fact is here that this level isn't just the base of this bearish order block, it also acts as a supply zone where shorts usually tend to pile in. To add another technical layer to this dynamic, this level as a price structure kept evolving after the initial dump. So this level has also now become resistance as seen by these sequential retests leading to a triple price reversal. But to be honest here, guys, this confluence of an ordered block, supply zone, and the 434 resistance area initially made me consider a short on the third retest. However, judging by the emergence now of this ascending trend line, the market's short-term bias somehow didn't seem as bearish as it appeared. Don't get me wrong though, the basis for a respectable, I should say, short entry was certainly there. And had I shorted the market below the 420 level, I would have easily raked in 60 to 70 points. However, it's important to remember that trading relies on a clear bias to build an objective edge. For me, the edge for an entry around the 430 or 420 area wasn't solid, especially considering how the ascending trend line would factor into a short play. That's why I abandoned the idea. Now, after this 100-point decline, as the market hit a low near the 226 level and rebounded following this consolidation phase, I recognize that the short-term bottom would be confirmed if the price breaks structure around the 260 area here. And as you can see, as the price exited this mini range, the breakout point became a good spot to consider a high probability entry, which is why I, as you can see, placed my short at that level, targeting two key profit areas. First, the 370 imbalance, and then the base of the supply zone that I mentioned earlier. As you can see, the trade performed really well with demand clearly dominating the market for the next hour or so. I also want to point out that I chose micros for this trade due to NQ's heightened volatility lately. By the way, guys, if you found this trade breakdown helpful, don't miss my next video where I'll be discussing similar setups and strategies. Alright, gang, thanks for watching, and as always, hope to catch you all in the next one.